Hi, I'm Kalila Reynolds and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to my new website, KalilaReynolds.com, and subscribe to our newsletter. And while you're there, you can check out our other financial news and videos. You can click the link up here or in the description box below. Now, come on, let's get this money.
First up, Mastercard is celebrating its one-year anniversary in Jamaica. What are they doing to include more Jamaicans in the financial system? We'll find out from Country Manager of Mastercard in Jamaica, Dalton Fowles. And later, the analysts weigh in on the latest market developments. Pulse is venturing into residential real estate with Pulse Homes. Lasco Manufacturing posted some surprising results, and NCB net profits are down 14%. We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
The number of new companies formed this year is trending towards record levels. Despite the pandemic and the ensuing recession, there were 3,586 new companies formed up to November 11, roughly 240 less than the previous record set in 2019 for 12 months at 3,822. Finance Minister Dr. Nigel Clark tweeted that while the situation is counterintuitive, more Jamaicans have become inclined to formalize and register companies with distortionary taxes abolished and tax credits introduced. For this year, more than 300 companies are registered each month, which put 2020 trending into record territory. If you're a foreigner planning to reside in Jamaica just to avoid or evade taxes in your home country, then you may want to rethink it, especially if you're to have local financial accounts. That's because Jamaica's Parliament recently passed a bill aimed at strengthening the administration of tax revenue. Finance Minister Dr. Nigel Clark said, among other things, the changes will require Jamaican authorities to give a report to the home country of certain foreigners living in Jamaica who have accounts at local financial institutions and vice versa. However, it only applies to countries that have signed on to the Convention on Mutual Administrative Assistance in Tax Matters, which Jamaica ratified in 2018. The treaty permits the global automatic exchange of information. Bank of Jamaica again moved to stabilize the depreciating Jamaican dollar last week. It intervened in the foreign exchange market on 2 consecutive days to sell a total of $35 million to authorized dealers and cambios through its foreign exchange intervention tool BFixit. In both instances, the BOJ restricted the buyers from reselling the funds for more than 20 cents Jamaican higher than they bought it for. Additionally, buyers could only resell the USD to end users who needed it to pay for essential goods and services. The Jamaican dollar brushed past the $149 to $1 mark in the middle of last week, a range it was last in around the end of August, after hitting a record low of $151.18 to $1. It strengthened to $147.94 at the end of the week. Meanwhile, BOJ has raised the allowable limit for local pension funds holding U.S. assets from 5 to 10%. This means pension funds will be able to double their US dollar-denominated assets by next year. It may, however, mean a reduction in portfolio holdings for some who hold more than the proposed limit, due to different regulatory rules previously set by the Financial Services Commission (FSC), which up to 2019 allowed up to 20% holdings, after which the FSC recommended that entities follow the BOJ on the matter. BOJ's cap will now shift from 5% US holdings to 7.5% starting this month, and then to 10% next April. National Commercial Bank NCB will discontinue its 4-decade-old KeyCard credit card as it transitions customers to newer platforms. The KeyCard suite of cards, which includes the Classic KeyCard, Lovebird KeyCard, Gold KeyCard, KeyCard Biz, KeyCard Biz Lite and Prepaid KeyCard, are being replaced with the globally accepted Visa and Mastercard. The bank said that the decision to transition was made to offer greater security and convenience features to customers who are now favoring online and international shopping. Tradewinds Citrus has entered the milk market with a protein shake, True Shake, just a month after acquiring drinks manufacturer Jamaica Beverages. The company has invested $3 million in the new milk manufacturing line. The new shake will compete against the imported brand Ensure and be at least 30% cheaper. Tradewinds also plans to launch a True Almond Milk by year end. Blue Emerald, a new subsidiary of electrical and lighting company SUBSRIBE, will run its recently built 120,000 square foot Hayes facility in Clarendon. That facility should be operational by year end. SUBSRIBE also wants to have the new company registered under the Special Economic Zone Authority to take advantage of the long-term tax concessions available under the new regime, which replaces free zones. Blue Emerald will be responsible for repairing Jamaica Public Service JPS transformers at the Hayes facility under a 4-year renewable contract signed earlier this year by SUBSRIBE and the Light and Power Company.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. When we come back, we talk Mastercard and financial inclusion. This segment of Taking Stock is brought to you by Bulwark Insurance Agent, insurance made easy, and Massy United Insurance. How good is your insurance? Welcome back to Taking Stock. In the credit and debit card space, Visa has long been the dominant player in Jamaica. But over the past year, Mastercard has been increasing its presence, getting into prepaid cards and other types of payment solutions. We've certainly noticed their brand presence step up in a big way. Joining us now is Country Manager of Mastercard in Jamaica, Dalton Fowles. Hi, Dalton. Thanks for joining me.
Thank you, Khalila. I'm very happy to be here.
Awesome. So Mastercard is celebrating 1-year anniversary, having a physical office in Jamaica. And I've been following your journey because it's right around the time that we launched Taking Stock as well. So we're celebrating birthdays around the same time. Congratulations.
Oh, congratulations to you as well. And I've been listening to your program. You've done a fantastic job. Of course, we miss you on Nationwide.
Yes. Yes, but we make moves, yeah? So tell me, why did Mastercard decide to step up its presence in Jamaica? Why this market?
More broadly speaking, I would say Mastercard has been stepping up presence globally. We have this view that everything that happens at Mastercard actually does happen in the markets. But looking at the Caribbean, though, as a division, all the countries combined, GDP is over 400 billion US per annum. So it really tells you that as a group, we're worthy in terms of just the size of the economy. So, looking at Jamaica alone, you may not think it's that great, but looking at Caribbean as a division, it makes a lot of sense. And what we have done is we have actually opened 4 offices. 3 offices across the region. So we now have one in Puerto Rico, one in Dom Rep, and of course, I'm overseeing Jamaica and Trinidad and Tobago.
Tell me about what you've been able to accomplish in the year since you've had a physical presence.
Again, in a year, not a whole lot to jump up about, simply because a lot of the initiatives takes time to get deployed. But I think the most important piece is really getting closer to our customers, letting them understand how important it is if you're going to stay in payments, the things that you need to do to remain relevant. So I'll give you an example. If you look in LAC, which Caribbean is a division, we believe we're about 15 years behind. And we see that in terms of adoption. And Khalila, I'm going
15 years behind what? 15 years behind what?
15 years in terms of infrastructure and use of digital technology. So I'm going to put you.
So behind who? Like first world countries? Who are you comparing?
No, behind countries like Mexico, countries like Brazil, Argentina, right? Those which are part of LAC, which were part of the LAC region. So a few weeks ago, you spoke about how difficult it has been for you to get paid, right? And we talk about digital inclusion. We're talking about getting paid, obviously getting collateral, and becoming digital. And a lot of small businesses, a lot of small merchants have traditionally had a problem. This is in Jamaica. That's a huge problem. But if you think about LAC as a region, you don't have that issue. You have a lot of small businesses that are digital, that are getting paid digitally. So getting in 1 year, turning that around obviously wouldn't happen because there's a lot of pieces that have to go into consideration. You think about the regulations, for example, you think about our culture, the infrastructure that is in place. So we focus on thought leadership, working a lot closer with our partner banks in terms of letting them understand what they need to do from an infrastructure perspective to be ready. And then we also know how to look at, okay, so if you want to do this and you truly want to accelerate it, what partnerships do you bring into play? Because you also have to understand that MasterCard works through our partner banks. And banks are banks, right? They are not technology companies. They are not fintechs. So you have a combination of trying to identify strong fintech partners with relevant solutions to enter the market as partners with commercial banks, and then the regulatory framework in terms of just getting that approved as well. So we've done, I think, a really great job of identifying partners. Lots of conversations are ongoing. Some are well advanced. I would be, in 2021, I expect to see maybe 2 or 3 really strong PayFac partners in the market that will be transitioning that digital. But we did also quite a bit of work in terms of the SME segment. So we've created some partnerships. So at the start of COVID, for example, we knew because of social distancing and the various protocols associated with that and lockdown in the economy. So we partnered with Seven Grave, for example, as well as Mailpack and a couple of others to provide services in terms of food delivery, because that was one of the issues that came out front and
I saw
center
that you, I saw that you partnered with Quick Plate, I think Seven as well. So both of them, just trust me, I definitely took advantage of those deals.
And think about it, COVID brought about that shift, right? But it's not just in terms of delivery services, because if we were to think about it, this has been a normal part of North America, LAC, Europe for years. But what happened is that it accelerated that growth. And then we also see it in terms of our own businesses, right? A lot of companies had to stop and rethink the way they do business in the market. So I think there's I would say, a general shift in view in terms of how people see working digitally. And we have also seen from the data that there has been a significant shift and adoption from the consumer's perspective in terms of saying, you know what, we really need to become digital. And then, of course, that is forcing a lot of businesses to stop and think about it as well, because gone are the days when people think, well, you know what, the only mode of doing business is, someone walking to my store. Now we have to figure out, well, how do I enable myself in a digital space? How do I sell my products in a digital space? And who do I now partner with to deliver that? So, we have now seen supermarkets now allowing you to order online, and you have what we call services coming up in the gig economies, where now you have a lot of delivery services popping up as well.
And the digital payment options are an integral part of that. I like where this is going, because traditionally, when I think of a MasterCard or your competitor, you just think credit card. You swipe, you pay, point of sale machine, online shopping. But I haven't really thought of it as an e-commerce solution, which is where we need to be headed, which we should have been, like you said, 10, 15 years ago. I give you a simple example. I just launched my website. I'm selling T-shirts and masks on the website. Right now, I'm using PayPal in order to get paid, but I have to have a US bank account to withdraw those funds. If I partner with a local merchant bank, it's going to cost me $50,000 a month for the fees, and I'm not making the level of sales to justify that expenditure every month. So it's a real problem for a lot of small business owners. I've had a lot of people, reach out to me saying, this is a pain point for us. How do we get paid, especially in times like these? So you're saying that you're working on a solution for that problem?
Well, we're working with several partners to make those solutions readily available in the market. And we expect next year, maybe 2 or 3 will go live. Part of my role is to identify strong fintech partners that can meet the regulatory rigors to enter the market. You can introduce to your partner banks, because remember, their concerns is, so if I bring a fintech in, how solid is this company? So once MasterCard stamp that brand of approval, they can feel highly confident. And these people's responsibility will really be to focus on essentially the long tail, right? Making sure that a lot of small entrepreneurs have the ability to get paid and get digital at the same time. So that is going to be a massive shift. We believe it's going to change a lot of the narrative in the market. So, for example, yourself, who have had to go through PayPal, that will change. We're very close to inking a deal. Can't speak too much about it now with a local partner bank for something very similar, but there are also lots of conversations ongoing. In some cases, we have approved the funding of fintech partners in terms of making sure that their solution meets the PCI standards. So we're making sure that they can go to the lab, get their solution stamped and approved so that we can introduce them in the market. Because again, it's also very important that we have local fintech partners being part of the ecosystem. If you think about it, the last thing you want to do is import every single thing. So there's a lot of opportunities as well for local developers who can create that value proposition for themselves.
Absolutely.
It could be a particular segment that they focus on.
Absolutely. And this could help us. This could help us boost our exports, because if we have amazing products here, and we do, and we want to sell them, the problem is, how do we collect those US dollars? So once we figure out that problem, that could just send our exports through the roof. So we've been talking about the solutions for small businesses, which is excellent. But another side of the coin for financial inclusion is on the consumer side. So we have been traditionally a cash-based society. What is your data showing regarding those trends? Are people going more digital and embracing it more?
So I would say yes. But what is happening, what the data tells us is that the people who are already financially included are gravitating towards more digital solutions. Now, for financial inclusion, we have to think about it from two sides of the coin, right? Because on one side, it's easy for you to say, for example, let's drive issuing prepaid cards. But if you don't solve the issue on the acceptance side, all that happens is that you see a line outside the ATMs because they take the card, draw the cash, and then they are back to doing cash transactions. So another thing that we're doing outside of the e-commerce space is also developing solutions for the long tail. So for example, we're looking to introduce a new technology next year called Tap on Phone, which essentially eliminates the need for small businesses to invest in MPOS. It's essentially just using your smartphone as an acceptance device, fully secured, meeting all the security standards. But what it does, it allows a lot more small businesses. So now what happens is a lot of people are in the cash economy. They can now have these devices. They can now begin to accept cards. So now you're solving both sides of the coin, right? So you're solving the issuing side, where, for example, for social disbursement, for governments, for example, they can now get paid directly on the card. But those people, they can now use those cards in their communities. That has to change. The other thing that we're looking on is the P2P solutions as well. So of course you have the person to person, then you have the person to merchant. Again, same sort of philosophy, where we really want to make sure that a lot of small businesses are able to register their business through partner banks, for example, because again, we have to manage the KYC and the controls in terms of the financial system, but do it in a way that makes it easy for small business to become part of what we call the financial and digital inclusion. So for now, we continue to see a growth in the cash use. For that segment of the economy, we want to turn that around in the near future. What are the numbers, though? What are the percentages that you're seeing? So So the 2019 numbers from the central bank was, well, using today's exchange rate, was probably about $9 billion in the cash economy. Looking at the growth between 2014 and 2019, I think the CAGR was about 14%. So there's still a heavy cash usage in the economy.
What is 14%, you said?
CAGR, the cumulative growth, CAGR.
Okay.
Cumulative growth over the time period for cash usage in the economy.
So that was 14%. But what's the growth in the use of digital payments?
Oh, so on the digital side, we are seeing as much as 40% across LAC. I would say in the Caribbean, it's probably more around 35%. So we're seeing growth in digital payments, but remember, it doesn't necessarily mean that you're solving the financial and digital inclusion problem. That's a separate issue that needs to be addressed, because we see that more profound in the growth in cash usage. In fact, I came across a study that suggested in LAC as a region, right? So we're talking the Caribbean, all of Latin America, as much as 80% of commercial transactions are still cash.
Wow.
And that is profound, right? That is something that every government in our region would really want to change, because there's a direct correlation, of course, in terms of getting financial and digital included and GDP growth as well. Because what happens, there's a lot of downstream opportunities. So think about the small business guy who today has no way of demonstrating to his or her banker that I'm running a legitimate business. Now you move those folks into the financial digital inclusion zone, where they now have evidence that I'm running a real business. It makes things change for them significantly, because then the cost of capital to them changes, right? Because if, first of all, now they can't convince their bankers that they're generating real business. But more importantly, now not only can they demonstrate it, they can now say, but given the fact that I've demonstrated, now you can have a lot of other loan products geared towards small business at preferential pricing for them. So, if you're selling coconut out of a handcart, maybe you can now get a van and sell it out of the back of a van. You can now sell way more coconuts. The fact is that small business is essential to a lot of Caribbean economies. And the only way you change that narrative, the only way you change, I suppose, the way these people are engaged in society, is to make sure that products are available for them to be included. It's not just on the digital side, on the acceptance side, but now you have to have the loan products, you have to have the government and the regulatory framework all coming together to make it work. So certainly in Jamaica, we're seeing moves by the central bank. They have introduced risk-based account opening. So that is great, right? Because what it means is that commercial banks are now in a position to open accounts with reduced KYC based on the size of the account, based on the risk assessment. That makes KYC for small business a lot easier. Now we need to add a lot of the digital pieces around it in terms of the merchant services, the acceptance services that will now drive people coming on board, and then the loan product rates that helps them to have access to loans at prices at a way that they can expand their business.
Right. Absolutely. Trust me, I hear you on this 100%. So, but why is it that people are or remain so hung up on cash? Is it fear that you're not able to touch and feel? People want to really just feel that physical cash in their hands and look at it, as opposed to looking at it on their computer screen. What are the barriers that prevent people from embracing digital fully?
I think some of it is cultural. We've been doing it this way for years. People have grown up doing it this way. And as a result, there is some reluctance to change. I think as a result, the solutions is more than just providing the service, right? You also have to have the education component that goes with it. But I think people are recognizing that it is central. And let's face it, there are forces globally that has that is pushing us in that direction. So if you think about what is happening now, one of the biggest companies in the world is Amazon. Everybody knows about Amazon. But if you don't have a card product, you can't shop with Amazon. So I think there are forces that are shaping this reality to say, you know what, we need to get digitally included, right? So I talk about financial inclusion. It's not just giving a card, right? You also have to include them in that digital journey so that they feel very comfortable that, you know what, this thing works, it's reliable, and if I do need my cash, I can access it. Oh, by the way, I don't really need it because everywhere that I would typically use cash, there's a digital solution, which goes back to the point I was making earlier, Kalila, that people like cash because where they spend very often, the only acceptance method there continues to be cash, which is why we have to solve both sides of the coin. We have to give them the cards, but we also have to allow the acceptance where they also do business.
Right. So I really like the approach that you guys are taking, Dalton, because like I mentioned earlier on in the interview, I typically have thought of a MasterCard as, okay, you apply for your credit card at the bank, but you're taking it from a different perspective, a much broader perspective of financial inclusion and making sure that we embrace that digital technology. Thank you so much for joining me, Dalton.
Thank you so much for having me, Kalila.
This is a conversation that absolutely must continue, and I look forward to your new products in 2022. You said you expect to be launching
2021.
21 next year.
Yes, next year.
Trust me, I'll be in line.
All right, thank you so much.
Okay, bye.
Yes, bye.
Up next, we've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agent, Insurance Made Easy, and Massy United Insurance. How good is your insurance?
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange advanced, the combined index gaining more than 2%. 100 stocks traded across both the main and junior markets of the JSE for the week ending Friday, November 13, 2020. 35 advanced, 48 declined, and 17 stayed the same. Nearly 126 million shares changed hands on the Jamaican dollar market, totaling $1.2 billion. Wigton Wind Farm ordinary shares traded the most, taking up nearly 21% of market volume. The stock lost 5 cents to open the week at 72 cents. Lasco Manufacturing traded the second highest, with people buying and selling 23 million shares in the company. Lasco's stock gained 22 cents to open the week at $3.97. And Mailpack Group rounded out the most traded, taking up 10% of market volume, with people buying and selling 13 million shares in the company. Mailpack was also third amongst the biggest gains to open the week at $2.21. Now let's see who had the biggest gains. Sagicor Group Jamaica jumped nearly 17% to close last week at $49.25. And First Rock Capital Holdings USD rose nearly 11% to close last week at 9 cents USD. On the losing side now, CAC 2000 fell an astounding 42% to close last week at $8.50. T-Tech fell 25% to end last week at $5.01 a share. Cargo handlers lost 18%, down to $6.35. Market recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Ideal Portfolio Services. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by Wealth Advisor at Ideal Portfolio Services, Dwayne Taylor, and Research and Strategy Analyst at Sagicor Investments, Jody Ann Aris. Hey, Jody. Hey, Dwayne. Welcome back to the program.
Hi, thank you.
Let's start with some news. Let's start with some news in the real estate industry. So Pulse has launched Pulse Homes, and they're set to begin construction in March. Jody, what do you think about that?
Well, I think it's good. Pulse is not necessarily new to the real estate market. I mean, they have been doing commercial renting for quite some time, so they're not necessarily new to real estate. However, they are particularly new to this section of real estate. They're still a little bit fresh into residential construction. And so I think that poses somewhat of a risk. I mean, it's a new territory for them. However, they have some amount of experience in real estate that should help to guide through whatever nuances they may face. Particularly when you look at the residential platform, looking at national housing policy at 2019, they pointed that there is basically a demand that is required of about 15,000 homes per year annually until 2030. And the Ministry of Economic Growth and Job Creation also thinks that there is a deficit of about 6,000 homes annually. So there is space, so there is demand for residential homes. So I think that from that point of view, it should be a good fit, or it should do well, seeing that there is a demand and they'll be providing some of that supply.
What I like is they're not going where everybody else has been going, which is the luxury apartments. They're targeting homes, so families. Dwayne, what are your thoughts on Pulse Homes?
I think it's an exciting development. I know we've been seeing a lot of apartments and homes being built right throughout the corporate area, right throughout Kingston and St. Andrew. So Pulse going into this field or exploring this option is definitely positive, because it is in demand. It'll be interesting to see how the pricing works out. Mm-hmm. I know that they had mentioned between 45 to 60, so that would definitely have to be a good townhouse or home for a family, but the prices weren't finalized. So I'm excited to see how they price it for the homes that are for sale, and also the rental prices, to see what they quote it in, how affordable it is for your average Jamaican family. So it's very exciting news from Pulse, and I think with the brand that they have, they won't have any issue capturing that market.
Jody Ann said that because this is fairly new, or this segment of the real estate market is new to Pulse, it poses a risk. Do you agree with that?
I do, because it's a new frontier for them. But given the many examples that we're seeing right now, because as I mentioned earlier, there are multiple properties that are being built around the entire Kingston, St. Andrew area, I do believe that, and they mentioned it in the article, that they do have the professionals that have experience in this. They know the proper routes to go in terms of what it is that they need to liaise with the government with. So I do believe that, yes, it's new territory. It will be something interesting to see how it develops, but I do believe they're equipped with the right staff to get the job done. So I'm excited to see what happens next year in March.
So Jody Ann, we've been talking about real estate quite a bit over the past few weeks on this program, noting particularly that real estate prices have held steady throughout the pandemic. But do you think that this trend will continue, that prices will continue to remain buoyant into next year and 2022?
Well, yes, from a demand standpoint, there's still a great demand, and particularly for areas within the Kingston, that Golden Triangle particularly, there is continued demand. So if it is that you still have the demand, and you think about it, that you have quite a bit of young professionals that are coming up, persons who are then thinking of using apartments for rental income, there is a demand that's going to drive. So even if there is a slowdown in demand, it shouldn't be much. And I think even if you do see a dip in prices, it won't be much. I do anticipate that prices are going to hold steady at least over the next 5 to 10 years, just based on the fact that there is a great demand for homes, particularly within a certain area, within certain areas of the corporate area. And even if it is that you look outside of Kingston, there is still demand where you have your urban towns that are developing. Considering that Portmore is not looking to become a new parish, there are certain developments that will come with that. So the demand is strong, and that will keep prices at where they are.
And what area is Pulse looking at for construction? The same Stony Hill area where they are now?
Yes. It's
right.
the Villa Renai properties, right?
Yeah.
Let's turn our attention to another company, this one on the junior market, Dwayne, Lasco Manufacturing. Tell me what's going on with them.
Lasco surprised us all. It's, despite COVID, despite the issues that we find a lot of companies face, we find that the manufacturing and distribution industry has maintained steady. Even though they have incurred some issues, they've been growing steadily. So Lasco recently reported an increase in both revenue and profit, I believe for 6 months over the same period. Year over year, it would have grown by 7%. So, that's very positive in the midst of being in a pandemic, a global pandemic. Lasco has definitely remained resilient. I do believe that profit is actually, the significant part is actually the profit. The profit actually went up by 31% for over the same period compared to last year. So this is definitely exciting for Lasco. I think trades skyrocketed day before yesterday. I think about 22 million shares actually traded day before yesterday. So, we're very excited to see what is going to happen with Lasco. They've shown us that they're able to weather this storm, and we'll look to see how they go about in even producing new products in the midst of this pandemic, or if they will remain with the traditional items that persons gravitate towards and that are essential to certain households. So very exciting news. I look forward to see how they enter into the third quarter and how things play out for them.
Well, this is the trend that we've been seeing with the manufacturing distribution companies, right, Jody? So, Dwayne, I think you said it was a surprise. I don't think so as much. Do you think so, Jody?
I think the surprise is probably the magnitude of growth. It's not that we necessarily didn't expect that they would grow, probably just the magnitude by which they grew. I think one of the things from Lasco Manufacturing is that they have been over the past 2 to 3 years working on their efficiency. And so that has played out in part. So even though there was growth in revenue, they were also able to reduce their operating costs through improving their efficiency, in part, particularly with the expansion of their warehousing, and that would have greatly assisted in the bottom line. In addition, I think generally for manufacturing, a lot of persons, you stick to your core. So if it is that you're in a pandemic, you want to make sure that you at least have food. So I may not be buying some of the other goods and services, but I definitely want to look at the food portion of it. I'm not sure if it is that I'm not sure that they have gained market share in any way because they're at a lower price end. And so persons would have probably considered a Lasco product because it's a little bit cheaper than other products. I'm not sure, I can't really speak to definitive, I don't have any facts, but it could be a possibility that would have spurred some of their increase in revenue.
That is indeed a possibility. Now, the other sector that we've been keeping a close eye on since the pandemic is the financial sector. NCBFG is reporting a 14% decline. What do you make of that, Jody-Ann?
All right. Well, I think one of the things, though, is I just want to point out that we have become accustomed to, probably over the past 2 to 3 years, of having net profits increasing year on year. And so when it is that, it dips. Even though there is a profit, we are somewhat a little bit disappointed, and it's still decent and good results considering the pandemic that we're in and considering all that's happening. Particularly if you look at it if you look at the full year, last year in the financial year that ended 2019, they had some one-off gains from disposal of whether associates or subsidiaries, and so that those one-off gains were about 8.2 billion. And if we took those out, there's still a decline. However, it's not as bad as if it is that you had them in there. So that's one. Also, there's the impact of COVID. And what you find with financial companies is that they issue loans and they have credit cards. And so there's a possibility that within a climate like COVID, persons may not be able to pay back their loans, or they may default, or they may, have credit card issues or delays in payment. And what the accountants do is that they make a provision for credit losses. So it's really an estimate. It's not exactly that they have definitely lost this amount based on persons not paying loans, but it's an estimate based on the climate, and they do some fancy modeling. And what you look at for the estimate for credit impairment, it's for this year is about 10 billion relative to 4 billion last year. So that's a big non-cash impact on the bottom line. So that would have contributed, as well as you look at their capital market segment of it, that there is reduced trading. So we're talking about the stock market, but people are still a little bit apprehensive. People are not running in as they did last year. people are still saying, let me wait and see, suppose, the numbers spiral, suppose there's a second wave. And so there's reduced activity in trading that would have also impacted. So a lot of what's happening is really linked to COVID-19 and the one-off gains that would have led to a reduction in profit. But nonetheless, it's still a decent performance considering the climate that we're in and considering that quite a bit of their financial assets would have depreciated relative to last year with just the general fall in asset prices due to COVID.
Dwayne, how soon do you see a possible rebound for NCBFG?
I think it's too early to say, but we have to, first things first, we need to get through this pandemic. That's definitely one of the major priorities I see the institutions and the government needing to work on. As Jody mentioned, the decline that we're seeing, yes, we're too accustomed to seeing profits over profits over profits. They're still very much a profitable entity. More or less, I think once once the country starts to open up a bit more in the sense that, persons can, go into the bank, do their transactions, people aren't so fearful about going out into these institutions, we'll start to see the volumes and the business picking up. I would look at, I don't want to guess and I don't want to speculate, but I'm hoping that next year we'll start to see the stock price rallying. I'm not sure when we'll see it return to that magnificent 220. But we can be optimistic and look. I have no doubt that NCB will return there in the future. But for now, I would look at next year to see the stock price rallying again. But we'll have to wait and see.
Thank you so much for your input, Jody-Ann and Dwayne.
You're welcome.
All right. Thank you, Kalila.
This segment of Taking Stock, The Analysts, was brought to you by Ideal Portfolio Services. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at KalilaReynolds.com and turn on those post notifications so that you can be the first to see all of my features. We want to help people learn more about money so we can all get this money together. This week on Money Mondays JA, Carib Cement is on track to have its best year ever in the middle of a pandemic. We'll discuss. And on Money Moves JA, noted market researcher and pollster Don Anderson tells us how your small business can benefit from big data. Follow me on Instagram and Twitter at Kalila Ray, and follow at Taking Stock JA on Instagram. If you want to connect with the analyst this week, check the description box below for their contact information. Also visit our website, KalilaReynolds.com, for financial news you can use however you like it. Watch, listen, or read. Now tell a friend about Taking Stock. Investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Reynolds. Stay safe.